All right, it's the scheduled start time, but we'll give it a couple more minutes just to wait for more people to arrive. Um, I'd say if you're listening to this recording, feel free to skip ahead to the 7 minute mark. Probably get started around there, 2 minutes past the hour.
Hey everyone.
Hey Flo, how's it going?
Pretty good. I'm amazed that Twitter Spaces still only works on phones.
Yeah,
It's nuts, isn't it?
yeah, it's ridiculous. Just to make sure, Ragnar, Nate, you guys there? Mics are good.
I'm here. Can you hear me?
Yep, all good.
Yes, sir.
Think so.
Cool. Okay. All right, I'm gonna give it one more minute. Some people message that they're still coming, then we'll just get started. Cool. Got a few more people who just joined. So I think it probably makes sense to get started. So, welcome everybody to this community review of the Theopetra tokenomics and their token sale. I'm your host, Maddie Stacks. I'm a tokenomics resident at the Stacks Foundation. If you enjoy this community review of projects and tokenomics discussions like these, you can tune in next month for a community review of either Arcadico or Alex DEX protocols on Stacks, depending on their availability. Today, though, we're talking about Theopetra, the solution and the token sale. And I'd like to thank our speakers for being here. They'll introduce themselves in a moment. And I'd also like to thank the Theopetra team for agreeing to listen to the community's thoughts on the solution, and later in this call, agreeing to answer their questions. I don't think we have anybody from their team yet who's joined, even though they did indicate they were coming. So hopefully they decide to show up and have a community discussion. All of us know that affordable housing is a big problem, right? Rents are up, mortgage payments are up. We all know that. We all need more affordable options and more rent to buy accessibility. And that's the problem that Theopetra wants to be the solution to. So in community reviews, we focus on two parts. One, reviewing the proposed solution to the problem, and two, talking to the team. And this has two objectives. First is so that the community better understands the benefits, the trade-offs, the risks of the solution from each other and the team. And two, so that the team better understands the community's point of view from people who have read the very same materials that the team is asking investors to base their investment decisions off of. This helps highlight any important changes to the model and it helps the team understand how they might improve existing documentation and investor awareness. So it's a win-win for everyone involved. When we're viewing solutions, we talk about three things. One, the business model. Two, the on-chain tokenomics. And three, the terms of the token sale. In this review's case, in Theopetra's case, what that translates to is basically the off-chain aspects of the real estate model, the on-chain aspects, tokenomics of Theo or REIT tokens themselves, and the token sale itself, and the risks, assumptions, and investor tools and disclosures about that. So, as I said, later in this call, we'll hear from the Theo team themselves if they join us. They did indicate they would join. And first, we'll hear from our speakers, people from the Stacks, Ethereum, Bitcoin community who have read the white papers, reviewed the details. Nate, I believe in your case, you're actually familiar with Theo from an in-person event. And so we can start with just a very brief introduction of our speakers and then discuss the off-chain aspects first. I'll kick us off. I'm your host, Matty Stacks, tokenomics resident of the Stacks Foundation, as I said, crypto since 2015. TradFi background where I designed and optimized algorithms, trading billions of dollars a day in exposure. I've traded REITs, that's Real Estate Investment Trusts, REIT, not to be confused with Theopetra's second token, REAT, though I can see how that's confusing saying it now. I've traded REITs, Real Estate Investment Trusts, for 15 years, and I've helped optimize the tokenomics of DeFi protocols and marketplaces on multiple different chains, and helped the Stacks itself, actually, which was peaked to about $4 billion in market cap, on its own consensus mechanisms and tokenomics. Ragnar, Florian, Nate, Derm, you guys want to give a brief intro?
Sure, I'll start. I guess we'll just go like clockwise. Thanks, Manny, for having this and everyone else participating. I'm Ragnar Leafthracer. I go back in blockchain and real estate quite a ways. I got started in Bitcoin 2011. Around 2014 or 15, I formed the International Blockchain Real Estate Association, which was a nonprofit dedicated to trying to get the real estate industry to adopt Bitcoin and blockchain in general. In 2016, 2017, I had a startup called Velox. We were the first and perhaps only company to create a blockchain token that acted as a deed. We did this in partnership with the second largest county in the U.S., out in Chicago, and we did a legal conveyance with them. I think this is the only time it's ever been done. So that was 2017. 2018, I stopped my involvement in Velox and the International Blockchain Real Estate Association because I realized I was just too early, number one, and number two, I was just completely burnt out on all the real estate ICOs. And then in terms of my actual real estate background, I have a master's in real estate development from Ivy League School. I've held a real estate agent's license, a general contractor's license. I've worked in construction. I've done sales, investment, property management. I've done a little bit of everything. So I kind of have a mix of blockchain and real estate, on-chain, off-chain. And currently I have a stack startup called Trajan, which is a reputation identity platform. Sorry for the long intro.
Pretty impressive. I'll maybe go next. I don't have that deep real estate knowledge. I'm Florian. I'm a software engineer by trade, and I've started a community called Tokenomics DAO, and that has come about because we analyze different protocols. We look into their business model. We look into how their token is designed, how the mechanisms work, how they accrue value, what drives demand in various aspects. We have done that for a whole bunch of different protocols. One of them happened to be in the real estate place, Citadel, which fractionalized real estate. It launched last year, and or the beginning of this year, and we looked into that. And I'm excited to learn from all you guys about real estate specifically. I hope I can bring some tokenomics knowledge.
Awesome, thanks, Phil. Yeah, we can definitely talk about Citadel. I think Theopetra has actually cited that as a failure, even though I know they literally just had a recently successful property sale.
They sold the property, yeah.
Exactly. Yeah. Interesting to chat about that. Nate?
Yeah, thanks for having us all, Matty. This is a pretty cool opportunity. I'm excited to be looped into this. My name's Nate. I write on Eat Sleep Crypto. I've been writing about how to value cryptocurrencies for about 5 years, and that turned into tokenomics, so how to engineer value into cryptocurrencies around 2020. So I've been thinking about a lot of these things for a long time, and one of my favorite things lately has been to evaluate projects and see their levels of value capture, their utility, and their security ongoing, and see whether these kinds of projects are sustainable. So I'm excited to see how Theopetra measures up on those three axes in this call.
Cool. Yeah, and it looks like Durham is having a bit of trouble.
Can you hear me?
Oh, yeah. It says you're still a listener, but
Okay, weird. But yeah, I can go. So I guess about myself, I work at a large asset manager on their crypto team and help manage all their discretionary liquid strategies for crypto. My background's in TradFi, spent some time in investment banking, focusing more on the energy sector, and then most recently was at a macro hedge fund. And then over this past year, I finally kind of made the move over to crypto Web3. Personally, been investing since like 2017, but seriously investing and researching since like 2019 or so. But spend my days basically just researching crypto and tokenomics and all that kind of stuff. So I'm happy to be here.
Awesome. Yeah, thanks, Jeremy. And I've seen you have some pretty heavy hitter followers. Like Chris Dixon follows you. How did that
happen? They like what I say. I don't know, man. Like all these, it's weird because a lot of these VCs they follow me, and it's like I feel like I'm more critical of VCs than anything else. So I don't really want to involve me, but
I guess VCs love like self punishment, so makes sense. Cool. Well, yeah. All right. So I think it makes sense, like we said, to talk about the off-chain, the on-chain, and the kind of just general kind of terms of the token sale, everything surrounding that. Given that's just a couple days away, maybe we can start off, like I said, with the off-chain. Sounds like Ragnar, you have pretty extensive experience in kind of blockchain real estate, so maybe it makes sense to kick it off to you of having completed these deed transfers, etc. And looked at tokenizing real estate. I mean, how does Theo's approach come across to you?
Sure, I'll see what I can add about the off-chain stuff. I have two major concerns. First, what they're saying they're doing versus what they appear to be doing, and second, why they need blockchain at all. So I'll hit both of those as briefly as I can. So for the first thing, I'm just looking at the website theopetralabs.com, and it says own your apartment for 2% down. T Homes unlocks the ability for anyone to own where they live, no matter where they live. And then it says enabling individual ownership of, and then it says multifamily residencies, hotel rooms, and accessory dwelling units. And then they have things about affordable starter homes. So what Theopetra says they're doing is offering home ownership. So if you're walking around a mall or a Costco and you pull people aside and you ask them, what does it mean to own a home? They'll say, I'll have a mortgage in a condo or a home, right? That's what the average person would say, and that's correct. And that's what Theopetra is claiming they're doing, offering that. But in fact, what Theopetra is doing is not that. They are offering 99-year leases and ownership in an LLC with an exclusive lease on a particular unit. So what they're saying they're doing and what they're actually doing is simply not true. The second thing that I brought up is why they need blockchain at all. I don't understand. So they could easily buy, apartment units and then do this very same model and never get involved in blockchain at all. And we should ask ourselves, why don't they do that? I'm looking at their website and it says the average condo cost in LA is $540,000, whereas the average apartment cost in LA is $280,000. So if there's this big of a spread, this big of an opportunity, it should be very easy to raise money to do this. But there's a very good reason why they're not, and there's a very good reason why this isn't done currently by anyone at all, really. So that's the summary of my analysis of this.
Okay, I mean, I think to be fair to the Theo team, let's say that this 99-year lease, it works almost like ownership. Like you can get access, even though it's not literally legally ownership, you can transfer it down to later generations. It still seems like your point is that there's maybe some misleading or strange terminology they're using. And then this model, like, if there is this big spread, why does Web3 need to be involved at all? And why don't they just capture those returns? Right? It seems like a closed system to me a bit. I don't know if anyone else has some thoughts there.
Yeah, that's exactly it. And I think I've asked them this on Twitter, and they've blocked me. But the question is, why don't they just say this on their website and in their white papers that they're offering a 99-year lease and a potential interest in an LC that owns these? Just say that. Don't use home ownership. Don't use mortgage, because they're not offering a mortgage. They say that later. Else, just say what it is you're doing. To me, that they're not doing that is a red flag, and it's enough for me to walk away as far as I'm concerned. The tokenomics, to me, after this point, are we're going to discuss, very important. But to me, that's, as a real estate person, like if I knew nothing about blockchain or tokenomics, I would look at this and I would walk away.
And it seems to have like nothing to do with the token or with the tokenomics, this whole thing, right? Because the whole home ownership, as far as I've read it, happens completely off chain, right? There's no connection to that token. Whereas others that have fractionalized real estate, they've kind of taken a piece of real estate and you can own a part of that. You can own a small chunk. So it's kind of this REIT model, but much more slice and diceable. But they're not doing that. They're not advertising that.
Yeah, I mean, we're already starting to get a little bit into the on-chain, but maybe we can get to that in a second. But I think I agree with you, Flo, personally. I mean, I wonder why they need to tokenize this in this way. Mel has said that they're worried about like SEC regulation, for example, so they can't do things like tokenize individual securities to individual properties. But I think it's model lofty.ai, which does this in the States, does it without needing to register with the SEC, securitizes, so you can tokenizes individual properties, so you can buy pieces of those fractions, invest in those properties, no SEC involved, no headache, it's on the Algorand blockchain. Why not do that model and maybe adjust it so that people can rent to buy, instead of having this model that kind of like, to Ragnar, to your point, it isn't an individual entity that you're investing in. You kind of get this like massive pool of exposure in terms of the tokenomics. So it seems a bit messy on that side.
Yeah, and big picture, I think we need to just look at this and say, okay, what is the purpose of any venture? It's to hopefully do something cool to change the world and to make money. And so we understand the mission, right, to make more affordable homes. And the second part is, okay, how do you make money? Nothing wrong with making money. I like money. So how do they make money? It's in owning tokens and then being part of T homes. So here's the thing is, they can do exactly what they're doing without tokens. Own these assets, lease them up, offer leases, and then figure out tokens. Why don't they do it that way? That's the first question. And the second thing to either ask or understand is, if they can't do this without a token, then maybe they shouldn't be doing it at all. In other words, if you can't run this real estate investment firm entity without outside money from tokenomics, I don't think it should be done.
Yeah, I mean, maybe we can just touch on one last point on off-chain, and then in the interest of time, move on to the on-chain, because there's a bunch of stuff to talk about there. But like, I personally, just looking at it, right? Let's say the spread between an apartment and a condo is like 20%, right? So the maximum profit from that forced depreciation, right, from making that difference is 20%. And then you have the year-over-year, appreciation in the property, and you have the rental return. But anything above, but that's it, right? That's a closed system. Anything above that, definitionally, is just speculatory capital being transferred from later buyers directly to earlier buyers. So I don't see how this is creating anything above what you're saying, Ragnar. Just do the model. If it's that profitable, do the model. Why are you bringing Web3 into it in this way, at least?
Yeah, and Maddie, I think to point out explicitly, moving money from later buyers to earlier buyers is the definition of a Ponzi scheme. And I know we that word gets thrown around lightly in crypto, but that's the main thing you look for is where are the returns coming from, and if they're only coming from new entrants, then you have a bit of a problem.
Yeah, I mean, I think to be fair, that the Theo team would say, if they were here, again, unfortunate that they've decided not to turn up after saying they would. It's unfortunate that, they would say that not all of it is coming from transferring wealth from later buyers to early buyers. Some of it is from real estate. But I feel like that's, again, to Ragnar's point, like, then just do that piece of it. Why wrap it in this kind of Ponzi-nomic-esque structure?
Is there any benefit to the renter using this model? Like the renter doesn't even care, right?
Well, I mean, the renter wants to have ownership of the home, and insofar as they're enabling people to rent to buy easier, right, and have access to homes, there is, in theory, a benefit to the renter. But one of the things I've brought up to the team is that they say the Theo token is a utility token, and maybe this is a good segue into the kind of on-chain stuff, and we can get Flow involved as well. But they say the Theo token is a utility token which gives you access to live in a T home, but 99% of people who buy Theo tokens are not going to actually be able to use those to live in a home. There's going to be vast shortage of number of homes compared to average holders of Theo tokens. So I don't really see, in practical terms, and this is something the team has also agreed with, where the value to the renter is.
Yeah, because it seems like if you're doing like a rent to own model, it's not something that you need a token for, right? It could just be how your real estate company works.
Yeah, that's exactly it. And as we go deeper into this, I think it should be in the framework of risk and who is at risk. So that would be for who's at risk for owning each token, and then for the we'll call them residents, the people living there. And so we need to understand, because that's what matters, right? Is can someone get hurt and who is it? And so the people in these units, they might not be aware they have this, they're renting from a place, or leasing a place, and they have a potential ownership interest in an LLC, and the success of that LLC partly depends on the success of these two other tokens and T-homes. So it's incredible risk and complexity, and I'm not sure that the residents, that's a trade-off they would want to make compared to other options. So I'll just leave it at that.
Because the T home, and maybe that's, I'm not sure how familiar people are, but I just drew this up in a little diagram, right? But the T home, they get some money from this whole token sale that Theopetra does, right? So then they'll do some mining of it's very, very complex, but they have some profits coming out of that whole token sale thing, and that goes into T homes. So that's kind of, when that machine stops, that profit will also stop coming in, and that makes it really unsustainable, I think.
It is definitely quite circuitous, just looking objectively at the white papers. Like, funds come into Theo, they go over to REIT, and they come back from REIT to Theo. It kind of begs the question of why the Theo token exists at all, especially since the Theo's rebates come from siphoning off of REIT in the first place. So if the financial benefit is coming from REIT, and the utility, there's no really utility reason that must be Theo. Why not just have the Theo token, if anything? So that was another kind of community question that was on people's minds. But Nate and Durham, I know you guys have written a lot about the importance of designing sound tokenomics, of business models flowing into the tokenomics flow as well, obviously. Do you guys have any thoughts on the pure on-chain tokenomics pieces of Theo and or REIT?
Yeah, so as far as I've seen, I'm still digesting a lot of the REIT part of it, the REIT flywheel, as they call it. But from a at a high level, looking at this from like a principled take, I think what Ragnar said was spot on. The idea this doesn't need a blockchain necessarily, and they've introduced some additional complexity to everyone else's point that is a security risk. And so the first thing I think where I want to start on this, and then I'll just we can go from there. Is they talked about a couple uses for the token, and this is one that bugs me and probably bugs you guys a lot. They say Theo is staked, and staking implies that it's staked for some reason. I haven't found what that reason is. I don't think they have one. But staking in like common parlance is like you lock up your tokens so that you can get more later. But staking in the truest sense should be to secure some aspect of a protocol. And Theo is not doing that, as far as I can tell, in these places where it's being staked. And in fact, it looks like it's just being staked to lock up the supply to support token price.
My understanding for the staking is like something related to membership, in the sense like, and if you have like a higher tier membership, you get like better access to like lower mortgage rates or something like that. But I don't know if that's like a
they have access at all.
Sorry, Flo, I didn't mean to interrupt you.
Yeah, I think you lock up or you stake. I think they have two mechanisms. Yeah, you can stake them or you can lock them up, and that will give you different membership tiers. I think like a normal membership and a premium membership, I recollect, and that will give you access or preferred access to home ownership. It doesn't guarantee it, or it doesn't give you any access. But that gives you access to buy a home from T Home. So my whole question, like to maybe to the real estate experts, is like, is their business model, is the T Home business model so much better that it's worth holding these tokens or locking up these tokens to buy from them? Right? Are they that much better in giving you those terms? And I think the answer to that question partially comes from the whole mechanism that they are subsidizing T Home with this whole new inflow of token model.
Right. I think that kind of gets back to the point Nate was making, that there's this closed loop of the real estate, and then everything on top of that is this Ponzi-esque type of like transferring money from later buyers to earlier buyers. But if you look at just the closed loop real estate piece of it, if you're buying every dollar you spend on Theo is essentially cutting in to any benefit there would be to these rent to buys or these kind of the closed loop portion of it, the real estate portion of it, the portion that Ragnar's been talking about. So, yeah, it seems to be something I wish the Theo team were here to discuss, because it seems to be a concern. Durham, did you have any other thoughts on Theo or Reed?
Yeah, I say with Theo, it looks like you can, or the way they're structuring it is such that you can buy it at a discount if you want to like mint new supply, which seems kind of odd.
Dynamic.
Well, it's super weird, right? Because it's like, okay, let's just assume that these memberships tiers are like super valuable to certain people, so there's actual demand for the token, right? So like that basically means that you can go and buy this token and increase your membership or increase your tier of membership, and then but like you also have this option of like creating new Theo at a discount, which basically means you would like never actually buy the token in the open market, right? Like that doesn't make any sense.
Yeah. I think that's interesting. I think that's something I've mentioned to them, but they point back to the ETH rebates, and the staking as being counterbalances to that. Although I don't think they've released any modeling at all to kind of like test or simulate those assumptions. Sorry, I don't know if I cut you off, Nate.
No worries. Yeah, and from a where was I going to go with this? From like a principal perspective, it makes sense that you'd want to have lockups, right? You'd want to have things that are decreasing the supply. But this is a mistake that I think a lot of people don't really understand. Just because you lock up supply doesn't mean that your token will have a high price. You need demand. There needs to be demand for the token to be used as something, and use as membership is not really use. That's a token sitting there in one place, not doing anything. And the market, like if there's no actual demand pressure for the token ongoing, then anytime someone sells and dries up the order book and just sells into all the buy orders of people that are speculating, your token price can go to zero, and your next highest, the next time someone buys it, they'll be setting the market price. So this idea that order books don't unwind the same way they stack up, and to counteract that, you have to have some demand for your token to be used as something. And I still haven't quite seen that with Theo.
I think I'd also add that these tokenomics with the two tokens is just super complex, and to me, that's a big red flag if it's super complicated and it takes forever to actually understand why the two different tokens exist.
Yeah, it's two different tokens on two different chains as well, which is just objectively speaking really unusual, really atypical.
Yeah, and one of them is an additional revenue stream, right? And it seems to be a significant one. I don't know what they think about it, but not sure what you guys think, right? There's this mechanism where and Maddie, you explained that to me. They kind of put that onto stacks, and then you said it's kind of this lottery system, and you kind of place in your stacks tokens, and you've got the chance to get more REIT in return. And the actual model is that Theopetra, they will be going in with that model. They will putting a lot of their tokens into that model and hope for other people's to join in as well, so that they will get these mining rewards, and those will then lead to ETH rewards, I guess. And that's one of the things, I guess, if this would work, this could drive demand for the token. Right? If this really would work, then holding Theo tokens would give you some of that ETH reward. But I'm really concerned that it will.
Yeah.
Because it's based on speculation.
Right. Yeah. As you were reading the white paper, what you're describing is proof of transfer light. And I was talking about the proof of transfer light piece. Yeah, it works like that, whether it's REIT or City Coins. You basically send something for a chance into a verifiable random function for a chance to win some rewards. I think it's fair to point out that Theo is saying, REIT is saying, I don't, it's confusing at this point, that the REIT that they win will not be staked, so it doesn't dilute you. But to your point, Flo, it's still super susceptible and driven mostly by speculation. Like, even if the real estate is mining REIT and not staking their own tokens, you still have no control over what other people are doing. And if you buy in at a time when other people are mining, for example, then suddenly the price can crash from where you bought in. That would be my concern, at least.
Yeah, really, I agree with that. Yep.
Yeah, Maddie, there was I just want to read this one note. We took a couple notes, but I'll just read it so I don't mess it up. And this goes to the point about donations. Maybe we could talk about that for a minute, and the nonprofit. So we have this note here that I'll read it. It says, how reliant is the model on donations, and why would charitable entities make donations to one piece of the solution if that directly profits another piece of the solution? Isn't that charitable entities paying token holders a profit instead of achieving their charitable objectives?
Yeah, we had a couple people write in questions. I think that's a great one. Like, Theo team has made some claims that the REIT token will be supported in part by charities supporting the cause of promoting affordable housing. But if that's part of the fueling these financial rewards, they're literally just paying profits to other people. So I don't see how. I think it's a good question. I don't see how it relates to a charity's kind of objectives.
Yeah, and not only that, but I'm concerned about the administration. Like, I think another topic is teams. I don't know if we're jumping around here or this is another topic, but who is running this? So, if the success of this project is partly determined by the nonprofit entity, who is it? Who's on the board? Who's the employees? What's their budget? Have they been registered? Are they tax exempt? What's the experience of the people operating it? What's their budget? Like, what is it? I haven't seen anything, and maybe I'm not following it closely enough. But as far as I know, there's real no information about the operators of this nonprofit. Number one, which is very concerning. And I've run a nonprofit real estate association, so I kind of know what it takes to work. And then second part, have they done any modeling at all for the amount they expect to get through donations to fund that?
Yeah, yeah. I mean, it seems like the general theme we're discussing. Anyone jump in, correct me if I'm wrong. Is that there just seems to be a lot of unnecessary complexity. Wrapping this potentially viable off-chain model in a bunch of unnecessary steps with confusing interactions and counterparties, and introducing a bunch of unknowns and risk. And to date, the team, other than these white papers, the team hasn't published any actual models or simulations or tools to help investors kind of understand that. So I don't know, Flo, you particularly look at white papers, and things all the time. Is there anything that you would recommend the Theo team release to kind of help educate people about potential risks of the model?
Well, what I'm really missing is like educating about this, just the bare bones business model, and that's something I don't see. They start right off the bat. Right? They start with this whole housing crisis thing, but they don't get into the way they're anticipating to make money with that, and they get right into the token, and that's, for me, always is a red flag, because then the token kind of becomes the product, but the product itself, that should be a self-sustainable thing, and then you can slap a token on top. And I see maybe they could use a token with all of this as a bootstrapping mechanism, right? Maybe they could incentivize some participants within the ecosystem to get on board with that. And maybe that's how you could use a token in this whole scenario. But the token is not the product. But this is what it really seems to me, is that this whole complex system of two tokens interacting with each other is the actual thing that they think is going to make them money. So, and to conclude, then it can't really be the business, or maybe the business, the value prop, or the success, or the chances of success of that whole business aren't that great. That's why they have to wrap it into that. So that's really what I would like to see in any white paper, is like, what's the actual business you're trying to achieve, and then get into the token. But tell me about that business on its own first.
Yeah. Yeah, it's odd, especially because they could easily do a model like, Lofty.ai, tokenize the real estate, no SEC registration required, let people invest, and adapt it to potentially let people rent to buy. So yeah, it seems. I personally agree with you, Flo, but I wish, again, the Theo team were here. They had said they were going to join, and we would be chatting with them now by this point in the call. But unfortunately, it seems like they have not shown up. Maybe we could just have some last comments. We had a couple, as I mentioned, questions come in written form, but happy to open up the floor to questions in the call as well. Just going to scroll through these questions that came in written form, see if there's any others that we wanted to touch on.
Yeah, Maddie,
yeah.
while you're scrolling through those and deciding which one to discuss, just from a real estate perspective, forgetting blockchains and tokens for a second, I've built many financial models for various real estate investments and funds and all sorts of things. And at minimum, there should be a robust, publicly available, vetted financial model just of the real estate. Forget the tokens. That's like a bare minimum. Like, if this came across my desk and I didn't see an Excel spreadsheet attached to the email, I would just delete the email. So the fact that they haven't produced that is, I'm trying to be like even keeled and measured here. But the fact there's not a financial model just for the real estate is extremely concerning, and it is the most fundamental thing. Like when I would get a pitch deck for a property, first you just flip through and you go right to the Excel model, right, to look at the returns and their costs and their assumptions. And so the fact that that's not there is, to me, a deal breaker. I honestly don't need to understand anything about the tokenomics, but I'll put it back to you.
Yeah, no, I mean, makes sense. I think it's definitely concern about just our investor, let alone the tokenomics and the business model. It's a concern about our investors aware of all the risks and assumptions being made. It seems like the consensus is no, they can't be, based on the white papers that have been published. But a question to that from the community: how can the property make larger returns than normal and without raising rents on tenants, as has been claimed? Would love to get into that, but unfortunately, I don't think I can speak to that, and the Theo team hasn't shown up, so can't answer that one.
I think we have a pretty good idea about that. It's, it can be compensated through speculation, and it looks like to me, when they say that Theo is used in the REIT flywheel, and they actually use the word flywheel, which to me is a red flag anyway. But they say Theo is used in the REIT flywheel, and it enables users to access these things they're saying they're offering, the rentals and the potentially like mortgages. Potentially, they don't even give guarantees on that. But it seems like they're using the discount purchases, they call it, or purchasing at a discount, to subsidize the potential losses of landlords in this case. And so I know we've kind of already talked about this, but that's where I see all the money going to is for this subsidization. But it's coming from the speculators and new entrants.
Makes sense.
So just on that point, I don't know if y'all are familiar with like Ohm and Wonderland and all those kind of those types of like protocol owned liquidity models, but that's kind of how they work. It's just basically they're fueled by speculators, and then that buy at a discount and then sell it like current market price, and then the token just kind of bleeds to zero.
Yeah.
I have a question.
Yep.
Could the Theo token be a security? Let's talk about that for a second. Are there any SEC risk with any of these tokens?
I mean, I feel like the regulation is obviously always kind of an unknown piece. I'm not a securities lawyer. None of us are on this call. But having spoken to some lawyers, having spoken to some institutional, VC type investors, I definitely know it is a concern of theirs that despite even this complex model, it will still be at risk of being qualified as a financial security.
I do think probably the reason that they made it so complicated, I mean, I can't really speak for the team, but my guess would be because they're trying to avoid being a security. I mean, if you wanted to make this like super simple, it would just be you own the token and you get like a % of rental income associated with all the rental properties. Versus this way, they're doing like a discount. You can buy the token at like a discount. You get like a membership. You don't get but there's like rebates, and there's just this weird, complex system that they got going on. It's almost kind of disguised that it's not, or just disguised that it kind of is a security.
Which is a shame, again, because Lofty.ai has a model that does that doesn't require SEC registration. So I feel like they could have just done something more direct. It feels like. We had other question, basically like, if the speculation dries up, isn't this just a more complex, risky, less direct way to invest in real estate or donate to public affordable housing? It feels that way at the surface, but would love to hear the team respond.
Yeah, I think it is, and I think the whole mechanism that they're implementing could also work in reverse, right? Where if it works and there's plenty of people buying the Theo tokens and they're going to put them into this mining circle, maybe make some money with that, then they can subsidize T-homes, and then T-homes maybe can offer more favorable conditions to people, and that might drive some demand for the membership thing. And so I can see this. There is a path up for it, but there's also this path down for it, right? So who's going to buy all these Theo tokens? And if that's not the case, if nobody's buying them, this thing can like quickly go down in value, and it becomes less and less. There's going to be less and less demand for it, and that will then also hurt this whole T-home thing, because they won't be favorable anymore, or they won't be able to compete with other home buyers and corporations that lease out. So yeah, the whole thing could go like spiral down and collapse.
Yeah.
Not sure if that answers the question, but yeah.
We had another question on Twitter that was asking about that. What I'm mainly interested in, how does Theo price affect your treasury finances strategy? It seems to be alluding this question to the FAQ says like the Theo team doesn't care if the Theo price goes down, but if the Theo price goes down, it seems to your point, Flo, and your point, Durham, it kind of triggers this Ohm-esque unwind that could be a death spiral.
Yeah.
Okay. Yeah, we had one or two more community questions, but certainly feel free if you're in the audience to raise your hand. We can dive into some questions here in the last 15 minutes or so.
I gotta go.
Okay.
But appreciate being on here. Something just came up for work, so
no worries. Please, you can make it, and happy to continue the chat if you want. But thanks for being here.
All right, man. Take care.
Cheers. Bye. We have the question if REIT is basically REIT, the REIT, the token. Just to be clear, it's me talking about the question. So is REIT intending to be a REIT, REIT? So is the token REIT intending to be a real estate investment trust REIT? If yes, REITs need to pay 90% to shareholders, but REIT, the token, only pays 80% to stackers. I think, from what I understand, the REIT token is not meant to be a literal real estate investment trust. I think they're turning another entity into a REIT, a real estate investment trust, but not the REIT entity or token. But that definitely seems, now that we're talking about it, like pretty confusing that they named it that way, where it sounds identical to talking about real estate investment trusts.
Yeah, I can tell you from just the pure real estate perspective that in my experience, we would never do this. I mean, we would never have an entity called REIT that's not a real estate investment trust. It just kind of sets you up for all sorts of potential trouble down the road. And I'm not an attorney. It's not legal advice. I'm just my armchair quarterbacking here with my real estate experience is I would not touch that if they call it a REIT, but it's not a REIT. And I don't understand why they can't just call it something else like equity ownership in an apartment token or just something that's catchy, but it seems unnecessarily, I'm trying to be even keeled here, but I don't understand why they'd call it a REIT, which has a very specific, obviously meaning, and especially when the REIT is supposed to be like the nonprofit portion. So that's not a tokenomics question, just something I wonder why they don't change.
Yeah, that's a fair point. We also had a question from somebody who works in the mortgage industry. Mel's mentioned they'll be raising money from corporations and institutions. Will that be in form of debt or equity? How do they get paid back? Again, a shame that Mel accepted the invitation and then has not shown up. I would love to have him answer that question, but it seems to be yet another assumption or requirement of the model, dependency of the model, that they also need to raise money from outside Web3. And if that's the case, back to your original point, Ragnar, why not do that?
Yeah, and that goes to the point of kind of the interdependency on things and also the opaqueness of the team, like who's in T-Homes, who's in the nonprofit, who's administering all these things. Because like if you're going to buy any of these tokens, I'd want to know, okay, well, who are your institutional investors? Who are who are the people investing in T-Homes providing the liquidity? What are their names? Like what's their track record? And so it's kind of odd because if you are in the T-Homes team, like you're triple dipping, right? You get to raise money supposedly, from institutions, and then you get token from from Theo, and then with the mining, and then there's stuff with the ETH token. And so if they're going to do it this way, they need to have complete transparency of everything. So T homes, if they raise money from these outside firms, that needs to be done first and transparently. Everyone needs to know who is who, and then once everyone can do all due diligence, then they could consider doing tokens. But it seems like they're doing it backwards, where we're going to sell tokens, and then later we're going to tell you who the money is behind T homes.
Yeah, right. I don't have any other questions that were sent in ahead of time from the community, but is there anybody in the audience who has a question or wants to share their thoughts? Yep, doesn't look like it. All right. Flo, Nate, Ragnar, any kind of closing thoughts that we could wrap up?
Are we gonna play this back to them in some way? Do we have a recording? Maybe
Yeah.
the chance for like an asynchronous feedback from them.
I think that would be great. This is recorded. It will definitely be publicly shared with them. The whole point of this is a community discussion. They had said they were attending. Looks like they decided not to, which is unfortunate, because I think the community could benefit from more open discussion. But yeah, this will definitely be shared.
Cool. Yeah, I'd love to hear what they say.
Yeah, my final thoughts is just people looking, blocking stuff aside, just looking exactly what they're saying here in terms of ownership. Ownership has a very specific legal definition when it comes to title. And in like the Theopetra white paper, talks about ownership in hotel units, accessory dwelling units, and they talk about having this concept of synthetic titles versus traditional mortgage. So if the team is listening to this Twitter space and they want to respond to it in their own space or video or something, if you guys are listening, I'd like to get more clarity on that, because it seems like you guys really kind of mix up the two. So that's my final thought, other than thanks, Maddie, and the other guys for participating and people listening in.
Cool. Yeah, appreciate it. We had one last question. Hero Gamer, you wanted to say something, and then we'll wrap up.
Hey guys, really appreciate you getting together for this. I put a question. So I just want to do due diligence for the Stacks community, really. So I'm asking the questions for the rest of the community, and I did put like a couple of questions earlier through. Basically,
yeah, I asked your questions. I don't know if you heard them, Hero. But
yeah, I didn't quite exactly. So maybe
okay.
if I just ask again, sorry. So
sure, no problem.
How come, like in a simple way, why do they? Because I found on their white paper that is the Theo said, I state, the Theo Labs does not know nor care if the Theo token goes up or down. That I couldn't quite understand that, and I hope to get answers. But maybe ideally with the team. But I will ask this question nevertheless for the community.
Yeah, we touched on that briefly. I mean, I don't understand it either, because it seems like if the Theo token goes down in price, you get this death spiral, this Ohm-esque collapse that a couple other speakers on the call have mentioned. So I'm sorry, Hero, I don't think we can directly answer the team's point of view, but would have been great to have them here to discuss.
Yeah, and I think the other question I think you guys touched on is like, who are the partner? Because it keeps, I think it comes up several times, like the partner T homes partners, but I don't think I saw any information about what makes up T homes. So is it run by the team, or is it some external company that they're partnering with? Because when you say partner, generally probably is based on like partnership? Maybe it's a separate entity.
Right. Yeah, that's a good point. Again, I think the team could answer that best, but I personally feel it's a bit misleading to call them partners when the same team is creating at least the concept for all those entities, and they're only meant to ever work with each other, passing cash back and forth with each other from the get-go. It's not like they're businesses that evolved and then became partners later. It's a good question. Can't answer it for you, unfortunately, but I agree with your question. Yeah. Cool. All right. Well, I think. Oh, sorry. We have one more request here for a question, and then we'll wrap it up by the top of the hour. Muthu.btc.
Yeah. Hey. One thing I was wondering was, with any property, there's always expenses, right? Like who, if the first of all, like, is there an underlying mortgage, or do they buy the property outright? And then, how do they, who pays the taxes, who owes the taxes, and insurance? If there's a claim against the property, who's actually doing those claims? And if, for what you guys were talking about, residents, right? What's the liability for the residents? As they're staying in the property. I think is there? I tried to read their documentation, but I couldn't really understand any of these things. Probably because I don't understand real estate all that well. But in any case, like if you know, if you could share at least what you've learned, that would be helpful.
Yeah, I mean, I guess it touches on Ragnar's point of like there should be at the very least kind of pro forma statements out there answering some of these more specific questions. I think it speaks to the benefit of this call, the benefit of this community discussion, that the Theo team participate, hear the community's point of view, answer the community's questions, recognize the community's maybe gaps in knowledge before a token sale event happens. So it's unfortunate they decided not to show up. But Ragnar, to your real estate experience, is there anything you wanted to touch on?
Yeah, to answer his question, that's a good question, and I don't have the exact answer. I thought that it's T Homes that is acting as sort of the asset manager, but then I saw something in the Theo section about that it's actually like Theo, the nonprofit that owns the properties. But bottom line is there's no pro forma for any of that, at least that they've released. So we don't know.
Yeah, and which I think again goes back to just in the community's point of view, and education is a very important piece of this, and hopefully the team does listen back to this at least, and then shares, and we can have a continuing conversation, at least asynchronously, as Flo said. All right then, so that's been this community review of the Theo token sale. Hope it was helpful to the community to better understand, the project, the potential risks, how it works, and especially hope it's helpful to the Theo team to understand the community's point of view and the community's questions. I want to thank you all for tuning in. We will have the next community review of Alex or Arcadico protocols next month, and have a similar discussion about their tokenomics and the future for their protocols. And I'd like to thank Ragnar, Flo, Nate, Derm, Hero for your questions, Muthu as well. Appreciate everyone, and have a good one.
Thanks.
Thank you. Bye.
Thank you, guys.
Thanks, guys.